18.8% appreciation on the median price here in Sacramento, California. That means year over year, we've gone from $375 as a median price to $445. That's almost $100,000 in 1 year. If you're new to the page, my name is John Campos. I'm one of the top producing realtors here in Sacramento, California, and my job is to make sure that you're getting the best quality content in as short of a time frame as possible. We're talking about gains that are beyond expert levels. You'd have to be a master at the stock market to get 18.8%, but guess what most people have to do? They have to live somewhere. We're not talking about Dogecoin, we're not talking about AMC, we're not talking about any of the stonks that you've seen on Instagram or the news lately. We are talking about houses. My bread and butter, something that I know extremely well, and quite honestly, something that has real tangible value that's not just gonna go up and burst overnight. So John, is this whole thing just gonna pop and fall like it did last time? Quite honestly, guys, I don't see any of the supporting data that this is in any way, shape, or form like it was last time, and let me explain why. For the first time in history, people are moving from the Bay Area to Sacramento, but they can keep their pay that they were making in the Bay Area, and that is the biggest game changer. There's always been investors from the Bay coming to Sacramento, buying but not living here because they figured one day it'd be a really good idea. Properties must go up here. They've seen it happen in Fairfield and Vacaville and Vallejo, and of course it was going to happen here, but it never did until coronavirus allowed them to now work from home, which could be anywhere. And what I do know for a fact from working with several of these clients is that if they were to leave the state, they get a pay cut. But if they stay in the state, they get to keep their same pay. Imagine, if you can, a dam that was holding back all the Bay Area wealth and money. And just keep in mind, the average person from the Bay is far more wealthy than the average person in Sacramento. Now they no longer have to go into work. They can work anywhere and make the same amount of money. What are they going to do? They're going to look for the best investment. They're tired of living in a 1,000 square foot house that they're paying $1.2 or $2.2 million for. Why would you do that when you can come to Sacramento where the median price was $375 and you could dang near have a mansion for $500,000 comparatively to what you were paying there? Less traffic, cost of living is way lower for everything, including electricity, utilities, all that stuff. I mean, the list goes on why we're the best pick possible. Now, they don't even have to worry about the 2-hour commute that it would take to get to work. They can just wake up in their very luxurious home and plug into work, and there they go. So if there was a dam before holding back all that income and stopping all the Bay Area people from coming to Sacramento just because of convenience or lifestyle, that thing burst. And you guys are barely seeing the first few drips of water coming in the form of multiple offers, more cash than you've ever seen on any property offer ever. That's just the start. Those are the people who are trying to get ahead of the curve. Once everyone else catches up and realizes and it hits the news, you're going to see more and more and more of this until we hit an equilibrium point where it no longer makes sense. Quite honestly, if everyone can keep their income from the Bay, but work here, it's going to be a while before we see that equilibrium happen. So that has nothing to do with what's going on in the country as a whole. But wait, those things do matter for us and our values as well. Let's talk real quick about the median income for a household here in Sacramento versus the median income for someone in the Bay Area and the savings, which we're gonna generally approximate. So the median income here in Sacramento prior to coronavirus was about $75,000 or about $110,000 combined income for a 2-person household, with the average savings following the mean for the United States of America, which is about $7,000 to $30,000. Those are the best metrics that I could find to kind of substantiate where we were coming and why our median price was essentially floating in that $375 to $390 range, depending on how hot it was that month. It was still increasing year over year, but it was going 3, maybe 4% a year, which is healthy growth. Now, by comparison, a quick Google search will show you that the average lower middle income for the Bay Area, San Francisco probably particularly, is $150,000. And if you look, you'll see articles on how to survive or how a millennial survives on $88,000 a year in the Bay Area, as if it's some sort of feat or accomplishment, which quite honestly, it is in the Bay Area with the rents and how expensive everything is. So just so you can understand, average income here, people are buying houses, living happily. Above the average income here, one person is struggling to live. Poverty is something like $115,000 in the city of San Francisco. There's a ballpark in here, but just so you can understand, the disparity of income. So now we're looking at an equalization about the greater Bay in Sacramento. There is a lot of room for Sacramento to rise. We are probably one of the cheaper cities of the big cities here in California. Oh, don't let me forget that the average savings account for the Bay Area, and I couldn't find any hard data on this, but man, when I'm writing offers, I can tell you that $100,000, at least for the buyers I'm working with, is no big deal, based on them having stocks and the companies they work for giving them stock interest or some sort of credits that we just don't have here. We're working on 401ks, Roth IRAs, maybe $15,000, $20,000, $30,000 if you're really set. And of course, people here do have tons of money as well, but not in the volume that I'm seeing, or not in the capacity that I'm seeing coming from the Bay Area. So that's really fundamentally two different markets that are now merging into one. Now, I'd be remiss if I did not mention interest rates at all in this video. The average interest rate historically, which is trending downwards thanks to recent years, is about 6.75%, okay? And right now we're at about 2.75, and obviously that's gonna float. It might hit 3%, it might go down to 2.5%, but we're in that ballpark. The amount of buying power that buyers today have and affordability versus what they had for all of history is insane. So even though these prices seem crazy, the monthly payment is nowhere near as bad as it was in the last big boom of the early 2000s. And to the point of interest rates, and you guys are probably gonna love or hate this one, but 1% interest rate change at the purchase price of $445, which is our median right now, that changes your payment by $220 a month. So that's about $3,000 a year you're saving with lower interest rates on just interest. Isn't that crazy? Okay, I gotta be on the move for this last point. The federal government in the year 2020 to stimulate the economy printed at least 25% more money. That's like $3 trillion more debt that they just created in fresh new dollars. Historically, not a good idea, but what I think we're seeing is that people, not just in real estate, but across the board in Bitcoin and gold and silver and all these other things are buying tangible assets so that their money is maintaining its value in this time of potentially high inflation. So what does that mean? Well, if you guys took economics, there's now more supply, which means every dollar you already have is worth less. It hasn't quite hit the ground floor for milk and eggs and cheese, but man, I'm pretty sure we're seeing it in real estate right now. People are trying to buy anything they can get their hands on that have value, NFTs, Bitcoin, crazy stocks. Obviously, real estate is probably the biggest one that I can point to and say, look, this is what happens. This is how inflation or appreciation starts. So if you don't have a home, we definitely need to talk about getting into one sooner than later. If you do, and you're interested in selling, personally, if it was me, I would hold just a little bit longer. Just depends on your situation, of course. So I'll leave that with you guys for now. Across the board, for Sacramento specifically, we have Bay Area influence coming in with more money, higher incomes than what we have. We have the interest rates are at historical lows, and they've bottomed out, it would seem, and are starting to rise again, but they're not moving very quickly up. So they're essentially at the bottom. And then third, we have the federal government printing more money than they ever have in one foul swoop ever in history. So all those things combined are going to lead to drastic price changes. And for Sacramento specifically, we're in a whole new market. We just have a different class of buyer. We have a different class of person who's moving in with higher paying jobs and more money, and it's overnight. So if there was a dam holding all this income back in the Bay, it's burst. It's not going to go anywhere. It's here to stay as long as people can work from home. And I can tell you, I don't see that changing anytime soon. So that's been your update for today, guys. If there's anything that I can do to help, please let me know. Send me a message, subscribe, like. I'll see you guys next time.